Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISC FX Options Weekly Outlook for April 12th, 2010. As always, this is Jason Ayres of OptionSource.net. Let's take a look at a weekly chart of the US dollar index. This is a great way to gain perspective as to how the US dollar has been trading against a basket of currencies. Well, the path of least resistance continues to be to the upside. However, we did see a second test of this 82.5 focal zone and a subsequent rejection, which now brings the pair back down to test support within this 80.5, 81 focal zone. Now, as long as the pair value holds within this range, we are still open to the possibility of an extended move higher, taking us up into this 84, 85 box. We would be looking at a break below 79.5 as a signal for a possible deeper retracement on the US dollar against most of the major currencies. If we take a look at our daily snapshot here, you can see that the dollar index did slide down to test the upper range of our 79.5, 80 focal zone, but now has made a move back into 80.5, 81. Once again, we want to see the dollar index consolidate a little bit within this range. And push higher up towards that 82, 82.5 focal zone for us to be confident that there is a continuation to the upside in the bigger picture still to be considered. Let's take a look at the US dollar versus the Canadian dollar as seen here in the ISC FX Options pair value CDD. Now, we've seen the pair value retrace back up into this 100.5, 101 focal zone after testing par last week. Now, if we do happen to see some consolidation here and a break back above 101, we would look for a possible continuation to the upside with a test of 102, 102.5 as a consideration. However, a rejection here off of out of this 100.5, 101 focal zone will suggest an extended move to the downside. Well, the US dollar retraced moderately against the yen last week as seen here in the YUK. The pair value slid down to test support within that 92.5, 93 focal zone, and we would be looking for a break below 93 as a likely signal for a deeper retracement down into this 91.5 to 92 range. Now, we are open to the possibility that there is a flagging formation taking place here, and a break above 93 and 3/4 would in all likelihood yield a test of resistance in the 94.5, 95 box. Well, the US dollar lost some ground against the euro as seen here in the pair value EUI. The pair now tests support down at the 73.5, 74 focal zone, and this level is important in maintaining the credibility of the uptrend in the bigger picture. Now, a break below 73.5 is likely to slip down to test support at the 72.5, 73 focal zone. We do have a major resistance level at 74.5, 75. Should the pair value find support at 73.5, 74, we are likely to see some resistance once again up in this level. Now, with the pair testing 74.5, 75 for a second time, we can't ignore this possible formation of a double top, which again lends credibility to a possible deeper retracement in the near term. Well, the BPX continues to slide lower as the US dollar slips against the British pound. Now, we had an important support level last week identified in at the 65, 65.5 focal zone, and we suggested that a break below that opens the window for a possible test down into the 63.5, 64 range. Now, that being said, should we see the pair value find some support here and move back up into that 65, 65.5 focal zone, we would be waiting for a break above 66 for us to commit to a possible continuation to the upside. That break above 66 is likely to yield a push into the 67, 67.5 box. Well, the US dollar continued to lose ground against the Australian dollar as seen here in the ISC FX Options pair value AUX. Now, we have as of late seen a little bit of a snapback in the AUX with opening the window for a possible test of what is now an important resistance level up into that 108.5, 109 focal zone. Now, until we see a break above that particular focal zone, we are looking at the path of least resistance continuing to be to the downside, suggesting that we may see a move towards the 106, 106.5 box. Let's take a look at a few of our key points. First of all, the U.S. dollar is now testing an important support level at 80.5. A break below 80.5 lends credibility to a more significant U.S. dollar pullback. The CDD slipped below 100 but found some support within this range. A break above 101 opens the window for a more significant retracement higher. The YUK pulled back last week to test support at our 92.5, 93 focal zone. A break above 94 could signal an extended move higher. The EUI has pulled back to test support at 73.5, 74 after making an attempt higher last week. The pair value appears to have formed a double top but has yet to break the support. The BPX has broken support at 65, suggesting a possible continuation lower. We would need to see a break above 66 to lend credibility to a move higher in the bigger picture. The AUX continued to slide lower, although making an attempted retracement. 108.5, 109 is an important resistance level. Failure to break above this suggests further weakness, leading to a possible test of 106. And this has been your ISC FX Options Weekly Outlook for April 12, 2010. As always, this is Jason Ayres of OptionSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.